Hey everyone, and welcome back to the deep dive. Today we are going to take a deep dive into Equinor.
Ooh, Equinor.
Yeah, they're this Norwegian energy giant, and
Interesting.
yeah, I know, right? You know how everyone's talking about renewable energy and all that.
Right.
Well, this company's kind of a puzzle. Their stock price is down.
Yeah.
But get this, they're promising to give back like a ton of money to their shareholders next year.
Wow, so they're making a bunch of money, but their stock is down?
Yeah, it's kind of a head scratcher, right?
Yeah.
So that's what we're going to try to figure out today. Is Equinor a hidden gem, or are they
Or are they headed for trouble?
Exactly.
Okay.
And the source we're diving into today is this article called Meet the Ultra High Yield Value Stock that's going to end up returning $14 billion to shareholders in 2024.
14 billion with a B.
With a B. So we'll see if that's actually going to happen.
Yeah.
So by the end of this deep dive, we'll try to figure out if Equinor is worth your attention.
Sounds good.
Even if you don't know anything about oil or wind turbines.
All right, let's do it.
So first things first, what exactly is Equinor and what makes them so different from all the other energy companies out there?
The one thing that makes them really unique is that the Norwegian government owns a big chunk of them.
Oh, really?
Yeah. It's not your typical energy company setup. And this gives them a huge stake in Norway's, massive offshore oil reserves.
Oh, wow.
And especially a place called Johan Sverdrup.
Johan Sverdrup.
Johan Sverdrup. Yeah, have you heard of it?
It rings a bell. It's like a mega oil field, right?
Yeah, exactly. It's the third largest on the Norwegian continental shelf.
Wow, third largest. That's got to be huge.
It's massive. And to give you an idea of just how big it is, Johan Sverdrup turns out more oil in a single day than ExxonMobil gets from their entire Guyana project.
Hold on, ExxonMobil, the American giant.
The one and only? And they've been talking up that Guyana project for a while.
Yeah, they have. So Equinor's one field produces more in a day than Exxon's whole project. That's wild.
It is pretty mind-blowing, right?
Yeah. That's pretty impressive. But I also saw in the article that Equinor is getting into renewables too.
They are, yeah.
So are they going all in on wind and solar, or is that just a side gig for them?
It's more like they're trying to balance things out.
Okay.
They are investing in renewables,
Huh.
but they're not going full speed ahead the way some other oil companies are.
I see.
And part of that is because Norway itself has some pretty ambitious climate targets.
Oh, right. They want to go green too.
Exactly. So that kind of influences what Equinor does.
So they're stuck between their old oil business and this whole new green future, huh?
You got it. And honestly, managing that transition has been easy for them.
Yeah.
The article even called some of their renewable energy moves sloppy.
Really? Sloppy how?
Well, they actually bailed on some projects they'd already invested in.
They what? They put money into renewable energy stuff and then just gave up on it.
Yep. It's called divesting.
Huh. Why would they do that?
It's hard to say for sure, and unless we were in those meetings.
Right.
But there could be a few reasons. Maybe they got in over their heads at first or ran into unexpected problems.
Like what kind of problems?
Well, technology stuff maybe. And remember, the whole renewable energy scene's been facing some headwinds lately. Higher interest rates, supply chain issues, things like that.
Yeah, that's true.
So maybe they're just caught up in those bigger trends too. It's not all necessarily their fault.
Interesting. So even these huge companies like Equinor aren't immune to those renewable energy growing pains, huh?
Nope. It's a tough business for everyone.
Makes sense. But we can't forget about that mountain of cash they're promising their shareholders either. $14 billion is hard to ignore.
Oh, yeah, for sure. That gets your attention right.
Yeah, it does.
And they're splitting that between two things, dividends and stock buybacks.
Okay, hold on. Dividends, I get that's like regular cash payments to the people who own the stock, right?
You got it.
But stock buybacks, what's that all about?
So basically, the company uses some of that money to buy back some of its own stock from the market.
Wait, why would they do that? Wouldn't it make more sense to invest that money in new projects or something?
Well, think of it this way. Imagine a pie.
Okay, I like pie.
Right? So this pie represents the entire value of the company.
Okay.
When they do a buyback, it's like taking some slices of that pie off the table.
Less pie.
But here's the thing. With fewer slices available, the remaining slices become worth more.
Oh, I get it. So by reducing the number of shares, they're making each share worth more.
Exactly. And usually that means the stock price goes up, which is good for the people who already own stock.
Smart. So is Equinor doing a lot of these buybacks?
They are. Over the past 3 years, they've actually shrunk their share count by over 15%.
15%? That's a lot of pie they took back. So how does that compare to other companies that do buybacks?
So it's way faster than Chevron, for example.
Chevron, the oil company.
Yeah, they do buybacks too, but over the same time, they've only reduced their share count by like 5%.
So Equinor is really putting the gas pedal down on giving money back to the shareholders.
You could say that.
But there's a catch, right? The article mentioned this cash party isn't going to last forever.
You're right about that. Starting in 2025, they're planning to dial it back a bit to between $8 and $10 billion.
Still a ton of money, but yeah, it's a drop.
It is definitely a noticeable drop.
So what's going on? Are they like having money troubles or something?
Not necessarily. It seems more like a strategic move.
Strategic.
Yeah, like balancing out the short-term rewards with, thinking about the long-term health of the company.
Oh, okay.
A big chunk of that reduction is because they're getting rid of this extraordinary part of their dividend. It was like a bonus payment on top of their regular dividend.
So they're like, hey, we've been spoiling you, but it's time to tighten the belt a little.
Basically, yeah. They want to make sure they have enough money to invest in growth opportunities.
Like that renewable energy stuff.
Especially that, yeah, which can be really expensive.
That makes sense. It's like they're saying, we can't just keep showering shareholders with cash and ignore the future. But this whole shift in how they're paying shareholders raises a big question for anyone thinking about investing in Equinor. Is this a bad sign, or is it actually a good sign that they're thinking about the long term?
That's a great question, and that's what we're going to dig into next as we explore their strategy and all the things that are shaping their future.
All right, listeners, we've set the stage. Now we know Equinor is this big player in the oil and gas world with a special connection to the Norwegian government. They're trying to get into renewables, but with some bumps along the way, and they're showering shareholders with cash, at least for now.
A fascinating mix, right?
Yeah, so how does all this add up to a smart investment decision? Stick with us, and we'll get into that in part 2 of our deep dive into Equinor.
See you there.
Yeah.
So we've got Equinor, this company that's making bank with oil and gas, but also trying to figure out this whole renewable energy thing.
Right, and showering their shareholders with cash at the same time.
Yeah, at least for now.
It's a lot to keep track of. But to really figure out if investing in Equinor is a smart move, we need to look at the bigger picture.
Absolutely. We got to see what's happening in the whole energy sector.
Yeah, because no company operates in a vacuum, right?
Exactly. They're all influenced by what's happening around them.
So what are those forces at play? What are the big trends that could make or break a company like Equinor?
Well, the big one, the one everyone's talking about, is the energy transition.
The what?
The energy transition. It's this global shift away from fossil fuels like oil and gas and towards renewable energy sources.
Oh, yeah. I've heard of that.
It's a huge shift, and it's putting a lot of pressure on those traditional energy companies like Equinor.
Yeah, I can imagine. It's like they're being pulled in two opposite directions and exploit their oil and gas stuff now or invest in this future. That's still kind of uncertain.
Yeah, that's a good way to put it. And remember, this transition isn't just about swapping oil rigs for wind turbines.
It's not.
No, it's way bigger than that.
Yeah.
It's about rethinking the entire energy system from how we produce it to how we use it and everything in between.
Whoa. So it's like a total makeover of how we power the world.
Pretty much.
Yeah.
And that's got to be a real challenge for companies like Equinor.
No kidding.
And within all that change, there are a few trends that are especially important for Equinor. The first one is that demand for oil and gas, while still pretty big, is expected to level off and eventually start going down over the next few decades.
Really? Even though Equinor has those massive oil reserves, they can't just assume people will keep buying oil forever.
Nope. The world's changing, things like electric vehicles becoming more popular, people finding ways to use less energy and policies to cut carbon emissions. It's all adding up to less demand for fossil fuels.
So in a way, their move into renewables is like a backup plan, a way to protect themselves from that drop in oil demand.
Exactly. They're trying to diversify so they don't get left behind as the world moves towards cleaner energy.
Makes sense. But let's be real, building a profitable renewables business is hard, right?
Oh, yeah. It takes a lot of time, money, and expertise.
And like we talked about earlier, their track record in renewables hasn't been perfect.
Yeah, they've had some wins, like buying a stake in Orsted, that big wind energy company.
Right, that was a big move for them.
Yeah, it gives them a foothold in the offshore wind market, which is really taking off.
But they've also stumbled a bit, like pulling out of some renewable projects.
Yeah, those divestments.
It makes you wonder, are they really serious about going green, or are they just doing the bare minimum to look good?
Hard to say for sure without being in their boardroom.
True.
Sometimes divesting can be strategic, Maybe those projects didn't fit into their long-term plan, or they realized they were taking on too much.
Like cleaning out your closet, sometimes you got to get rid of stuff that's not working anymore, even if you spend a lot of money on it.
Exactly. The main point is shifting from an oil and gas giant to a big player in renewables is messy and complicated. There are going to be ups and downs along the way.
Okay, so we've got declining oil demand and the challenges of going green. What else is impacting Equinor?
Another big factor is this growing focus on ESG by investors.
ESG, what's that?
It stands for environmental, social, and governance.
Okay, but what does that actually mean for investing?
Basically, investors are now looking at a company's impact on the environment, its social responsibility, and how well it's run, along with the usual financial numbers.
So it's not just about making money anymore.
Nope, investors are looking for companies that are sustainable, ethical, and well-managed on top of being profitable.
Gotcha. So how does this whole ESG thing affect Equinor?
Well, being a big oil and gas producer makes things tricky for them when it comes to environmental performance.
Yeah, I can see that their main business is contributing to climate change, which isn't exactly ESG friendly.
Right. It's a tough balancing act. They need to show they're serious about reducing their environmental impact while also keeping those profits coming and those shareholders happy.
Which brings us back to those big shareholder payouts we were talking about.
The dividends and buybacks.
Yeah, those are definitely attractive to some investors, but
Yeah.
could they also be a way to keep people happy while Equinor figures out this whole transition thing?
That's definitely a possibility. They might be using those payouts to keep investors on their side while they work on building more sustainable business for the future.
Interesting. Okay, so we've got declining oil demand, the challenges of the energy transition, and the rise of ESG investing. What's the fourth trend we need to keep in mind?
The fourth trend is geopolitical risk and energy security.
Geopolitical risk. Sounds intense.
It is basically the world's a pretty volatile place right now. And the conflict in Ukraine has really shown how fragile our energy systems are and how important it is for countries to be energy independent.
Yeah, it's scary to think how much we rely on certain countries for our energy.
Right. And for Equinor, this geopolitical risk creates both challenges and opportunities.
Okay, let's break that down. What kind of challenges are we talking about?
Well, for starters, they operate in a politically sensitive area, the North Sea.
Right.
It's surrounded by countries that don't always get along, and any increase in tensions there could disrupt their operations.
And it's not just their neighbors, right? What happens in other parts of the world, like the conflict in Ukraine, can impact energy prices and supplies everywhere.
Absolutely. The global energy system is all connected. So Equinor can't escape those bigger geopolitical shocks. But like you said, there could also be some upsides for them in all this uncertainty.
Oh, how so?
Well, as Europe tries to move away from Russian energy, Norway, with all its oil and gas, becomes even more important.
So being a Norwegian energy company could actually be a good thing for Equinor in a world where everyone's worried about energy security.
Potentially. Yeah, they're seen as a reliable and stable supplier, which should help them attract investment and get those long-term contracts.
Makes sense. All right, so I think we've got a pretty good understanding of the big trends shaping the energy landscape for Equinor: declining oil demand, the messy transition to renewables, the rise of ESG, and all the geopolitical stuff.
And we got to remember, all these trends are connected and constantly changing. It's a dynamic situation.
And no crystal ball here.
Nope. But understanding these trends helps us see the challenges and opportunities facing Equinor and any company in the energy business.
So what does all this mean for the average investor trying to figure out if Equinor is a good buy? We've talked about these big trends, but how do they translate into real-life decisions for someone building their investment portfolio?
That's the million-dollar question, and that's what we're going to tackle in the final part of our deep dive. We'll connect these trends to Equinor's financials, their growth potential, and those juicy shareholder payouts to help you make a more informed decision.
All right, so we've talked about all those big trends shaping the energy world, the shift to renewables, the whole ESG thing, and all the geopolitical stuff happening.
Yeah, it's a lot to keep track of.
It is like trying to sail a ship through a hurricane, right?
Yeah, pretty much all these powerful forces pushing and pulling in different directions.
Exactly. And our brave adventurer in this case is Equinor, trying to figure out how to navigate all of that.
Right.
But let's get down to business. What does all this mean for someone who's actually thinking about investing in Equinor?
Well, it creates a pretty interesting situation. You got this company that's basically a money-making machine right now.
Right, raking in the profits from all that oil and gas.
Exactly. But then there's this big question mark hanging over their future. You know, how well can they adapt to this new energy world? That's what's going to determine if they succeed in the long run.
It's like they're straddling two different worlds, benefiting from the old way of doing things while trying to build a bridge to the new way.
A great way to put it, and you can see that duality in their financials.
Oh, how so?
Well, on one hand, they have a super solid financial position, low debt, consistently making good money.
That's the legacy of being an oil and gas giant, right?
Exactly.
Mm-hmm.
But on the other hand, how much they earn in the future is going to depend on things that are really hard to predict.
Like what?
Like what's going to happen with oil and gas prices.
Mm-hmm.
How fast will the world switch to renewables? And how good will they be at building a profitable renewable energy business?
Yeah, no one has a crystal ball for that stuff.
Nope. So for potential investors, it comes down to two big questions. What's your risk tolerance? And what are your investment goals?
Meaning, are you okay with some uncertainty, and are you looking for quick profits, or are you in it for the long haul?
Exactly. Someone who wants to make a quick buck might be attracted to Equinor's high dividend yield and those aggressive stock buybacks.
Right, we talked about those.
But they also have to be comfortable with the ups and downs of the oil and gas market because those prices can change dramatically.
Makes sense. On the other hand, if you're thinking long term, you're probably more interested in how well Equinor can build that sustainable and profitable renewable energy business.
Right. But that takes patience and accepting that it's not going to be a smooth ride. There will be some bumps along the way.
For sure. And let's be real, there are no guarantees in this business. The energy transition is complicated with lots of unknowns. There will be companies that succeed and companies that fail.
Absolutely.
So how can our listeners make sense of all this? What should they be paying attention to when they look at Equinor as an investment?
I think it's good to think like a detective. Gather the evidence and piece together the puzzle.
Ooh, I like that.
Don't just look at the headlines and the big numbers, dig into their financials, analyze their renewable energy projects. See how serious they are about their ESG commitments.
So it's about understanding their plan, their strengths and weaknesses, and deciding if you believe they can really make it in this new energy world.
Exactly. And even if you decide Equinor isn't right for you, it's still worth keeping an eye on them. They're a major player in the global energy scene, and how they transform is going to be a fascinating case study.
Yeah, a real test of how these old-school energy companies adapt to a changing world. So, folks, we've covered a lot of ground in this deep dive. We've talked about Equinor's unique history, their strong financial position, all those big trends changing the energy sector, and the challenges and opportunities that are out there.
We've tried to give you a framework for thinking about Equinor as an investment, but ultimately the decision is yours.
And that's what the deep dive is all about. We're not here to tell you what to do with your money. Our goal is to give you the information and insights you need to make those decisions yourself.
We're like your research buddies, helping you sift through the noise and ask the right questions.
Exactly. So until next time, keep learning, keep exploring, and keep diving deep.